As Sri Lanka navigates the next phase of its recovery, this final session will explore what lies beyond the horizon. In this important discussion titled The Challenges Ahead. It gives me great pleasure to invite Dr. Krishna Srinivasan, Director of the IMF's Asia and Pacific Department, to serve as moderator for this session. And for this discussion, I'm truly delighted to welcome a distinguished panel to the stage. Dr. Geeta Gopinath, First Deputy Managing Director of the IMF. Honorable Professor Anil Jayanta Fernando, Minister of Labour and Deputy Minister of Economic Development. Dr. Nandalal Veerasinghe, Governor of the Central Bank of Sri Lanka. Dr. Indrajit Kumaraswamy, former Governor of the Central Bank of Sri Lanka. Dr. Dushni Veerakoon, Executive Director of the Institute of Policy Studies of Sri Lanka.
Good afternoon, everyone. And good afternoon to the panelists here. So some of you were not here through all the sessions. So let me just briefly summarize where we were at the end of the last 3 sessions. So the context for this one. So we started with Sri Lanka staring at the abyss in 2022. Economic situation was dire. The impact on society at large was even worse. So what was a crisis, economic crisis, morphed into a humanitarian crisis. How did Sri Lanka get there? We talked about the fact that this time the crisis was just not a BOP crisis, it was also a debt crisis. The fiscal situation was worsening for many years. In 1980s, revenue to GDP was around 20%, and in 21-22, it had come down to 8%. Public expenditure was very high at 20%, revenue was at 8%, so a huge fiscal deficit, translated into large public debt, which ended up at 128% of GDP in 2022, which was assessed to be unsustainable for quite some time, but it took some time before Sri Lanka approached the IMF for a fund support program. The exchange rate had been maintained at a very high level, much above its equilibrium level, so loss of reserves, growth had slumped, inflation had escalated. So in March 2022, Sri Lanka seeks support from the IMF, and the program was approved a year later, following how they resolved the debt issue. Today, where are we? Growth has returned, 5% in 2024. Inflation's well down. Reserve cushion is better. Debt has been restructured, but we are far away from a strong and sustained recovery. Given this, let me reach out to Geeta first. Geeta, when the program was put together for Sri Lanka, there were different kinds of shocks which Sri Lanka was dealing with. Today, we are in a situation where the situation seems to be stabilizing. I won't say stabilize, but stabilizing, but yet there are different kinds of shocks. So can you walk us through the global backdrop in terms of the risks, challenges you see, and the implications that could have for Sri Lanka?
Sure, Krishna. So when you think of the global backdrop, I think 2025 is a year when the world has moved away from the rules-based global trade order that we've come to live with over many decades. And that is a big transformational change in the global economy. So if you look, for instance, at the US tariff rates, before the April 2nd tariff increases, the US effective tariff rate was 2.5%. And then you had April 2nd come, and it shot up to over 25%, the effective tariff rate, which is higher than we had seen in about 100 years. And now many of those tariffs have been reduced, and the effective tariff rate is close to about 15%, somewhat below 15%. But there is still tremendous uncertainty about where tariffs will stay. And of course, other countries are also responding, and you have counter-terrorists from many other countries in the world. I think there has been a fundamental change in how the world perceives the benefits of an open, rules-based trading system. For one, there is a very big important factor that it's coming into all negotiations, which is national security, which is playing a very important role in deciding who to trade with and what kinds of goods to freely trade in. But there's also been a big increase in protectionism because of the concern that global trade has not benefited everybody, and certain communities and countries have lost out. And because of that, people want to protect some of their industry. So it's a very big paradigm shift in the world, and all countries have to live within that. What does that mean specifically? One, of course, is just the uncertainty around all of this, because it's unclear where the global economy is going to be headed, which makes it very difficult to do policy making in this context. It's very difficult for companies and firms to invest, to think about where to put your investments in, which part of the world to put your money in when you have all these shifting global alliances. Secondly, in the actual tariff rate itself going up has implications for how much trade is taking place in the world. China's exports to the US, direct exports to the US, have fallen substantially. More trade is getting sent to ASEAN economies and to Europe from China. So we're seeing shifts in trading relations changing quite rapidly. And of course, if this continues and we move to a more fragmented world, we are in a world where productivity will become weaker, when we are already suffering from weak productivity growth. So I think this is the number one, I would say, factor that is affecting almost all countries in the world.
Thanks, Geeta. In addition to that, you also have the tensions rising in the Middle East now. So that's a new thing. So, Governor, given this backdrop, global backdrop, and you've achieved a lot over the last 2 years in terms of the program, how can the achievements achieved under the program be preserved given the global backdrop which Geeta just described?
Thank you, Krishna. Very important, this starting point Geeta mentioned about the new global order. I think going forward, what we are going to see much more uncertainty in terms of global events. I think this is where it's going to be the biggest challenge for us. I think we have learned a good lesson for not having sufficient buffers built up to face any unknown global event. That is why we had to go through this very deep pains through without any buffers, external monetary and fiscal buffers. We lost everything even before the COVID. So this is a good lesson. So going forward, future, even if we do everything right locally here, policies, but we don't know what's going to happen, as Geeta mentioned. So then what we need to learn is to ensure that we continue to build up the buffers, both the monetary, the fiscal, and external. There's a good framework already given, and the baseline scenario, which requires minimum 3% growth, primary surplus is 2.3%, and the reducing debt to GDP and inflation target, all good framework is there. Why this is crucial at this point is that, for example, now President talk about the importance of FDIs, attracting capital foreign savings into Sri Lanka for us to grow at an even higher level. But even if we give all the incentives, what is the guarantee any foreign investor any investor can make a decision where to invest, how to invest at this kind of uncertainty? I don't think we can't rely on basically expecting there will be financial inflows, FDI inflows, even mid-long-term basis coming in. Instead, we need to strengthen our external accounts, especially in terms of current account surpluses, at least balance current account surpluses, and create domestic savings. Ability to generate investment through domestic savings, through current account surpluses is a key in terms of going forward. We need to keep these buffers continues to build up, both current account as well as external buffers in terms of reserves. And we're talking about zero levels to 6 billion is not sufficient. I mean, given the uncertainties, we need to build more going forward. We need to move in that direction. And on the first monetary policy side, also we need to have sufficient buffers in case if there's something happen. So we need to be able to support the domestic economy through monetary policy instruments. That's one thing. Even fiscal policy, we are talking about what would have happened if 44% tariff was imposed, and how the government can support the increasing unemployment, social safety net, pulling more people into poverty. This is a situation where it's much more important than ever for us to move in the same direction, keep building up buffers going forward, and we learn a good lesson by running out all the buffers, and even financial sector from our responsibility in terms of banking sector to be able to support at least the domestic economy, those activities for them to build buffers, have liquidity and capital buffers so that in terms of any eventuality, we have sufficient space for us to support the economy, given more large new global order is a lot more uncertain than we ever had in the history. That's a good point Geeta made. So thank you.
Thank you, Governor. Minister, the same question for you. How can you preserve, in this environment, the progress you've made? And which policies do you think are most important to preserve going forward?
Thank you very much. It's extremely difficult to just point out just one policy.
No, take your time.
I'm just trying. Because they are interconnected,
Yes.
Interdependent, and rather there are nexus between these variables, economic variables, and it really goes beyond the numbers and economy as well. There is untold story behind numbers as well when it comes to society, culture, politics, and all. So we are living in a political economy. So however it is, so I consider the revenue-based fiscal consolidation is a key policy in the pursuit of recovering. Because as far as the government is concerned, the tax revenue, it's a revenue to the government, but it is not a revenue generated in the economy. It is a shifting of revenue generated in the economy. In the economy is contracting and stagnating when it's extremely difficult and challenging for a government to have a robust the revenue-based fiscal consolidation. However, the government and the other agencies just came out with this particular decision and did it very well, and it was one of the successes. And it is connected, I just connect few things to these policies, starting from this, the revenue, the policy. The second one is the debt. So debt sustainability. Being a government has always a leverage of refinancing. But no matter what you do, so whether the effectiveness of your financing policies and other things, the refinancing would help you to continue all the time. So real problems may not be really pop up unless we face critical challenges. As far as the local refinancing is concerned, still government is proceeding well, so that is managed. However, government face a big problem for refinancing from the external market. So that is one of the biggest issues that really affected the debt sustainability. So that restructuring process and the working on this debt sustainability is another interconnected the policy. The social stability, social spending is also enough, because when we think of all the time the economic variables, in a political economy, who pays the biggest price is the general public. Because due to some other reason, so that is what we are really facing. Then all the burden is passed on to general public. There is a limit, and after that they can't bear it. So therefore, in this, the policy, the structures and the revival plan, the social spending also played a very critical role, where we have just targeted the groups, because instead of increasing social spending. So those are key areas I would like to highlight, within which the government and the central bank and other, especially the ministry, were able to do these things in addition to the policy matters, and gradually we were able to stably bring down the interest rate. Because interest rate is going to lay a foundation for other variables, even for exchange rates and other things. So from economic point of view, these interconnected the variables played a critical role in policies. Thank you.
Thank you, Minister. I'm going to come back to you after the first round of questions. Dushni, can I come to you now? Geeta talked about a very challenging external backdrop. Now, given that, what do you see are the domestic priorities for this government in the period ahead? And in particular, I would say, what should Sri Lanka do to get growth going in a more durable and inclusive way?
Thank you, Krishna. I would still, listening to the panelists in the previous sessions, I think the message that came very clearly is that Sri Lanka cannot afford to be complacent. Yes, we've made a very positive recovery, but there is still a long way to go. So for me, still, the number one priority is that we need to stay focused on macro stability. And we can't afford to take our eyes off that, particularly in view of all the risks that are piling up on the external front. And secondly, I mean, Sri Lanka also does have a history of letting macro stability sort of take a step back when we see improvements happening. And I think we can't allow that kind of slippage this time around. So macro stability is number one. Second, on the growth front, I see that, the macro stability that's been painfully arrived at over the last 2.5 years, we are seeing that translating into an economic recovery. But my sense is that the positive growth momentum that we are seeing, it is still a sort of a cyclical recovery from where we were, the sort of contraction of the economy for 2 consecutive years. So we're bouncing back. And what we need now to do is to turn that into a growth process that is driven more by structural factors. And I think we need to put in place reforms that will kick in efficiency gains and productivity gains going forward. For the next 12, 14 months, the focus should be on that. Because with all of the risks that's sort of piling up on the external front, we might see GDP growth flatlining. And I think that is a situation that we ought to avoid because we've got this far. And if we sort of focus on the reforms, and I think the government has spelled out a certain areas of focus, and one priority that they have spelled out is digitalization and infusion of technology. And I think there are easy and quick gains to be had on productivity and efficiency fronts if we start implementing them, improving public the delivery of public services, improving the business environment for private investments, etc. And to just underline that fact, I think Sri Lanka is fortunate in this instance because the usual pattern has been that the IMF, the crunch of our adjustment coincides with the electoral cycle. And this time that's been avoided because there has been continuity in the program without a disruption last year. So as we move to 2019 electoral sort of distractions, we have 3 good years in which to convert this to a self-sustaining growth momentum if we can focus on implementing reforms in the next 12 to 14 months. So I am positive on that front. If we get it right, we may not come for an 18th program.
So if I understand you right, give greater impetus to private investment because any kind of structural reform can have a fiscal cost. And that the government can't afford right now because you said it should continue with macro stability. So focus more on reforms which don't have a fiscal cost to it. Digitalization may be one. Any other ideas there?
I think the digitalization and technology infusion will not be a heavy burden on the Treasury, unlike infrastructure spending on roads, highways, etc. We have major skills, the issue of skills gap. But that is a medium to long-term reform that I think the government will have to look at. It's what is feasible that it can do in the next 2 to 3 years to ensure that we keep building up and bridging these skills gap, particularly with the out-migration that we've had. And there are other areas, labor market rigidities. These are regulatory reforms that is not going to be a burden on the Treasury. So it is, I think, the appetite for reforms is for the government to figure out how much they can do and what they can do in the next 12 to 14 months and beyond that.
Great, thank you. Indrajit, I'm going to come to you now. So I'm going to provoke you with this question. I think you made this point earlier while talking that you've had 16 IMF programs before this, and there's always a boom-bust cycle. You make some progress, you go back to square one. What do you see are the main challenges to keep Sri Lanka on the economic recovery path today?
Thank you very much, and let me first thank the governor and the IMF for inviting me. Good to be back. I'd like to cluster the kind of challenges one needs to address to sustain the progress that's been made. Before that, let me associate myself with, lots of people have spoken very positively about the progress that has been made in terms of stabilizing the economy. And it's quite remarkable. In my view, it's been a remarkable stabilization. And there is a lesson to be learned. In the Sri Lankan context, it's very unusual for 3 presidencies to have policy continuity. So that is something that's different. Secondly, we've had 1 governor, 1 ST during that period. That is another lesson that needs to be internalized.
But that may change now.
Well, but it's okay. But he's done the heavy lifting.
Okay.
He's done the heavy lifting on the fiscal side. Hopefully his successor will sustain it. And so those lessons we need to internalize. But I'd like to cluster the challenges into 2. One is maintaining, sustaining what I would call a new paradigm for macroeconomic management in the country that is already in place. And secondly is to develop an outward-looking competitive economy where growth is driven by tradables and export transformation. On the first one, I think we've got a long way along the path we need to go. The second one, we are still very near the starting line. So let me take each of those in turn.
Okay.
On the new macroeconomic paradigm, that I like to identify 5 elements, a lot of which actually endorse what Dushni just said before me. One is the Public Finance Management Act. The fiscal rules have been tightened. Mm-hmm. And so the root cause of what I think it was you who, was it you who, I can't remember, called domestic or homegrown crises. Yeah.
Yes.
So the root cause of the homegrown crisis, the terrible one we had this time, but we've had other homegrown crises as well. And the root cause has invariably been the government's fiscal operation. So now the fiscal rules have been tightened. We stick with the primary surpluses. That, the excess demand that's pumped into the system by these unsustainable budget deficits will hopefully be a thing of the past. So that's one, maintaining the Public Finance Management Act. 2, the Central Bank Act. In the past, we tended to have fiscal forbearance in monetary policy. So the excess demand in the system from the unsustainable budget deficits are compounded by the fiscal dominance in the monetary policy. And here, a couple of things. One is there is no longer treasury representation, the governance structures of the central bank. The deficit financing is no longer permitted. And also, the financial repression that was often used, bring down our interest rates artificially, is also no longer part of the framework for flexible inflation targeting, which is data-dependent and forward-looking. So the most egregious forms of fiscal dominance in monetary policy have been removed by the Central Bank Act. So those, I think, are absolutely critical. And as far as the exchange rate is concerned, we've had more than one bout of the double whammy of trying to defend the indefensible by depleting our reserves. This we've done again and again. So that, as part of the flexible inflation targeting regime, as you know, the exchange rate is the first line of defense, and it is now run in terms of the dynamics of the demand and supply situation in the FX market. So that framework supplements what has happened in terms of the Fiscal Management Responsibility Act. But the two together, I think, are the key pillars of the new macroeconomic paradigm. Second, the third thing is the Public Debt Management Act. The new Public Debt Management Office actually addresses the kind of fragmented nature of debt management we had. Bilateral and multilateral debt was managed by the External Resources Department, syndicated loans by the Treasury Operations Department, the ISBs by the Central Bank. So all this has been brought now into one place, which I think is potentially, I've said, for the moment I'm saying potentially a good thing, because you could have a more holistic operation in terms of debt management. And it also removes a conflict of interest that existed for the central bank. Because under the old system, the central bank simultaneously was expected to keep down the cost of borrowing of the government, at the same time run a robust monetary policy in terms of containing inflation. And there could be conflicts of interest there. The central bank tried to have Chinese walls, etc., but I think it's good to remove this conflict of interest outside. But for this to work, you have to have the right people. So the institutional structure is, I think, worthy, but you have to make sure the right people are there to take advantage of this new structure. The third thing is really the cost recovery pricing for the SOE sector. Now, it has done a number of positive things. It has reduced the pressure on the budget. It has reduced the pressure on the balance sheets of the state banks. It has actually, I think, triggered a better way of doing social protection, because by moving to full cost pricing for fuel and, for say, energy, I think that has forced the governments to be in there, to build up a credible, better targeted social protection scheme. That's still a work in progress. There are still things to do. But I think it is another benefit, I think, of moving to full cost pricing, because that has kind of put pressure on having a better social protection scheme, which is targeted. And and the final pillar is the corruption legislation, and the governance recommendations of the IMF diagnosis. Now, you may ask, what is the connection between macroeconomic management and corruption frameworks and governance frameworks? The thing is, corruption is an implicit tax on development. If you have a 20, 30 or more % margin in terms of corruption, the hurdle rate of return on projects go up. So and not only that, it leads to a distortion of resource allocation, because the size of the commission, rather than the rate of return on the project, determines which project you are taking on board. So that is very important and is very strongly linked also in terms of the macro management of the economy. So this paradigm, as I said, will certainly strengthen the case of making sure that we do not have homegrown crises. But as the governor pointed out, you also need to build up buffers in terms of dealing with an increasingly uncertain and unpredictable world. And this framework will help you do it. Because otherwise, it will be very difficult to build up the buffers if we deviate from that framework. So on the first challenge, we have gone a long way, and we need to make the challenge is now to keep it intact.
Right.
The second thing of building the right growth model, we have a long way to go. I think
let's come to that growth model in a minute.
Okay.
Yeah. Let me bring Geeta in here. So Geeta, you heard the panelists here. From your perspective, how do you see Sri Lanka making the changes needed to cope with this new environment, the external environment? What do you think Sri Lanka should do?
So firstly, I think the challenge for Sri Lanka right now is that it's gone from being in crisis, which is the time when it's easier to push through the needed policies. When the house is on fire, people are willing to accept big changes from happening. So now, some stability that has come with improved macro policies, but to then now maintain the course and to stick with the program and to make sure there's no backtracking and not to forget the crisis that was there 3 years ago. I think so that is one of the important challenges for Sri Lanka right now. It's also a kind of a bit of a political economy issue, as you have to make sure that society comes along, that they're not, that they don't feel frustrated, that they don't want to give up on the reform agenda. So this is something that will require very active effort from authorities, engaging with all the different stakeholders, including civil society, in continuing the reform. In terms of dealing with the specific thing that I mentioned, which is on trade policy, of course, Sri Lanka has to continue its negotiations with the US administration and bring down ensure that the effective tariff rate is nowhere near what was proposed on April 2nd, which was a very high number. So, and I believe there's progress being made on that front, so continue with that. But I think also and this is true in this new global order, which is you have to find a coalition of the willing who want to continue to engage in trade and deepen trade relations and continue to build trust. So there's much more scope for regional trade integration in many parts of the world and in Asia too, which is one area to invest in. But otherwise, I think every country needs to build resilience to this much more complex global order that there is. And I think the best way to attract investment is to do the more what we call the horizontal policies, which is making sure that there is ease of doing business in the country. If you can make it simpler for people in terms of the processes that they have to follow to open a company or to export from Sri Lanka, making the customs agencies much more efficient, making the facilities much more efficient, improving over time human capital, getting rid of corruption at many different levels, obviously making sure that your macro stability stays there on a continuing basis. Those are the policies that give you the biggest bang for the buck, as opposed to policies that are targeted to some companies on a selective basis. Those are much harder. First of all, governments are not particularly competent at identifying which companies are going to be the biggest contributors to the economy. And so those ones end up being much more costlier for taxpayers and not really adding much to growth. And we have seen that in Sri Lanka when there were periods of lots of tax exemptions provided that did not come with macro stability and growth on a durable basis, right? And so those lessons have to be kept in mind, and doing things on a much more horizontal basis, especially for a country that requires a lot of these reforms, is, I think, the direction in which to go to build resilience.
You heard the panelists here. So one key point, there's always a risk of going back to square one. So you see some stability, you go back to the old ways. I mean, that's the experience in Sri Lanka the last 16 times. How do you guard against that with the mandate you have?
Okay, of course, you're right. Risk is always there. So how best we manage and mitigate the risk, we have to have a better assessment of the risks that we are facing. And there are internal risks and external risks. At this moment, some external risks are pretty much imminent. Some of the things so beyond our control, but however it is, we need to be always very optimistic and address them. Among them, the US the tariff issue, because we never expected, and certain things. We are really working on that. Mm-hmm. We are hopeful that we would be able to have the lasting bilateral agreement, and the GSP plus the requirement as well, and the current situation that has erupted the world, like the war tense situation. So these are risk factors. Apart from that, continuing risk factor is also there, that is none other than the geopolitics. We have a very clear assessment about this geopolitics, because we are not a part of this geopolitics. So just maintaining that string, the very straight the foreign policy, it is always possible for us to go for collaborations and the partnering to mitigate this particular risk. So this is how we look at the external risk. Then the internal risk, really to great extent, it is connected with the your growth, the production, productivity. So how best we could energize and incentivize investors to come and invest, then creating a level playing field and bringing economic democracy to great extent. So now we are on a project what we call digitization, the special, the ministry, the digital economy. We strongly believe that this digitization process would solve many problems, including these corruption issues, and building the investors the confidence to great extent to come and invest in Sri Lanka, just catering to local market and the export market as well. If you carefully analyze Sri Lanka's export over last 3-4 decades, so we have not acquired significant diversification. So we are just focusing on selected markets, selected products in a context where the global supply chain, value chains are really very widely changing. So that we need to think of this diversification, finding new markets, new products, especially entering into the global supply chain. So that is another area to manage this particular the risk, because you can't avoid risk. You need to deal with risk. That is that, and even as Governor highlighted, of course, external the sector, we need to have a strong buffer. In maintaining this particular buffer, key variables are there. Of course, exports would really help us. And in addition, because of our expatriate remittances, that's also a significant part. Instead of just looking at the passive remittance to build our reserves, now we are exploring the possibilities of giving our expatriates more opportunities into the part of our investment and reintegration of expatriates and providing them more investment opportunities. Especially, we had several discussions. Still, we are having these discussions with the Sri Lankan diaspora as well. So that also would be another part, because if they come back with their investments, that would be a signal, and there will be a spillover impact to other investors as well. Because if you just look at the macroeconomic variables, in our past, there is a significant gap between investment and savings. So we need to have, just need to explore how best we can increase our local domestic savings. Otherwise, always we are dependent on borrowing and investing. So that is another area that we have thought of in facing these risks. And again, in the pursuit of reviving the economy in the short run, we need to go for low-hanging fruits. So therefore, tourism is another targeted area where we can address these issues or minimize risks. The medium term and the longer term, we need to think of more stable, sustainable production economy, where energy sector is one strategic priority for us. We have high potential, and we are open to a big array of, big mixture of energy sources. So how best we can capitalize the benefits of the renewable energy. The forecast is there that in the longer run, the cost of renewable energy is going down, and the capacity for renewable energy is expanding. So how best we are going to capture these things really depends on us. We have focus on this energy market as well. But unfortunately, our energy requirement as of now, it's limited. That we have our own constraints. Maybe if we just increase our production capacities maybe by 50% or maybe double, our requirement would be around 6-7 gigawatts. But when it comes to wind power, so it has been predicted that even we can go up to 50 gigawatts. So how are we going to explore it? Of course, we have to have this the grid connectivity or any other means just exporting it. Otherwise, we can't get the benefit out of it. So that is one area. The other area is the modern agriculture and the mineral-based value-added industries. Also, we have focused. We know that we need sizable investment for this thing because at this moment we do not have sophisticated technology. However, we have our tacit knowledge that we have gathered and learned by doing things. So if we can mix together, so there is a way out, we believe, in the future. And at the political front, we are very keen on to have efficient and corruption-free, high-quality the public service in the country. And
let me come to that question. Yeah. So one thing, I've been here to Sri Lanka 3 or 4 times now. Nobody's very happy paying taxes. They were used to taxes coming down. Now you ask them to pay taxes, and the reason they give is there's a lot of corruption and there's a governance issue and so on and so forth. So is there a strong case for a social compact in Sri Lanka? Social compact.
Yes, there is. In the social fronts, in Sri Lanka's the culture, society, the economic engagement is concerned, there is the strong the mandate from the people, as well as there is a great hope from people that we would bring back or revive the economy and drive the country towards their aspiration. That understanding is there. However, it is we need to materialize and we need to demonstrate these things by action, because otherwise people may not tolerate that thinking that the government is doing the right thing and just fighting against corruption and bringing back everything and increasing investments, unless they realize they get benefits of this particular the economic revival. The social bond and social contract may not last long. So therefore, it's up to us to convince them that it is a challenging task. It is a collective effort. Everyone has to work together to achieve these things. So hope that we can do, especially from the political the sphere. Now, one thing the people believe that the corruption has been really removed from the political sphere, but still there are cases, the other areas, so that I think we have to slowly but steadily move ahead.
Thank you, Mr. Dushni, can I come back to you on that question? We talked about it briefly yesterday, I think, at dinner. So, is there a strong case for building a nice social compact in Sri Lanka? And again, there are some countries, there is this stakeholder engagement. So you draw upon the various parts of society to make sure the reforms continue, there's no peddling back. Do you think there is a case for Sri Lanka now? The same, I'll ask to you after that, Indrajit. So, Tushni, your views on that?
My sense is, that, on the idea of a social compact, yes. I think accountability, governance weaknesses, lack of an independent public service, these have been factors that have, repeatedly got us into this problem. And part of the problem has been that we have not been able to proceed consistently with any reform effort. One reason, just watching how policy formulation happens, is that it happens outside of the government structures. It happens through committees.
Right.
And when the political leadership changes, the committees may reconvene with different faces. But there is no sort of institutionalization of that reform process within the state technocracy or the bureaucracy. So there is no continuity in those efforts. That's one problem. Second problem is lack of consultative processes here. And I think this is not just Sri Lanka, but it's a regional problem as well. that government sort of communication of why certain reforms are necessary to the public. And I think that has to come from the political leadership of the opportunity cost of not doing something to be sort of conveyed to the public to build consensus, because we can build in fiscal rules and pass legislation, but unless the people are convinced that there is a bigger sort of cause for going along with those acts and fiscal rules, etc., they will not do so. They will sort of go back to bringing populist pressure on governments to serve their immediate needs. But if they do understand that populism has a price, and we've sort of, had a hard sort of lesson 3-4 years ago, and a reminder that is this what you want? But here are our policies to improve governance, accountability, a more sort of independent public service. And if we deliver these things to collectively engage with government, with stakeholders, with CSOs, I think that sort of ecosystem is necessary.
Indrajit, your views on that?
Do you want me to talk about compact for tax or more generally the kind of growth model?
More generally, I mean...
Okay, more generally, yeah. So, if I can pick up on the growth model, we have a flawed growth model, right? I think it was Professor Abeyratne this morning said, essentially it has been driven by non-tradables and largely financed out of the government budget. And clearly, such a growth model is simply not sustainable. And this is why we've had these kind of stop-go models, stop-go experiences. So there are a couple of things which are urgently required. One is we have long outstanding structural reforms. In the 1980s, I was seconded from the central bank to the ministry, and I worked as the bag carrier of the finance minister of that time. And I used to go around with him. And the things he talked about, structural reforms, are exactly the same things today. Factor markets, SOE reform, investment climate, investment promotion, trade policy, trade for education.
The good news is that's true across many countries.
Okay. But we have to get out of it. And I don't know how many countries have had a crisis like ours. So the thing is, so you have to ask, why is it? The one new thing is digitalization, clearly, and what Dushni said is absolutely right. But why is it that, we've known what to do, why does it not get done? And I think there are possibly two reasons. One is the gestation period of these reforms tends to be somewhat long. And so politicians are not incentivized because they may not get the payoff within one electoral cycle. So they don't really, they kind of kick the can down the road. Secondly, and this is probably the more important reason, while the economy as a whole and the people, majority of the people benefit, there will be strong vested interests who lose. And it could be business, it could be trade unions, etc. And they have been able to resist very successfully. Partly because of the nature of our kind of capitalism that we had in this country, just constantly being blocked. So this time around, this government, it doesn't have the same baggage as previous governments have had in terms of this resistance. So hopefully they have more space to push these reforms. Of course, trade unions have also been a source of obstacle. So their challenge, given their deep roots into the trade union movements, is to make that a strength rather than a weakness by using that link they have to essentially raise awareness amongst unions in terms of how the present model is just not sustainable. You cannot get sustained growth of 5% if you're driving it through tradables financed by the government. So you have to get private investment going. The Honorable President today talked about foreign investment, but both foreign and domestic. My experience is that initially you get domestic investment spiking before FDI comes. Because the domestic investors know when the environment has got better. So that tends to be the sequence. So we have to see domestic investment going up because the climate has improved. And then we have to see foreign investment, I think, will follow. The final thing is, these reforms that I talked about are, I think, potential growth rate, in my view, is trending down towards 3%. So we have to get it over 5% to be confident we don't have to have another debt risk. And to be confident that we can make inroads into the poverty, sharp increase in poverty. It doubled, I think, in a year. Now, see, if you really look at where the poverty trend line has gone, we had got it down to about, I think, 18%, if I'm not mistaken, or less, or 13%. Went up on 13%. So people have been extraordinarily patient, but we don't know how long they will be patient. So this growth agenda we need to drive and drive fast.
Thanks, Indrajit. Governor, I just want to change the topic a little bit. Since you brought up the issue of debt restructuring, what are the lessons you have learned from the debt restructuring experience in Sri Lanka? And what can you do to make sure that you don't have to go through this again?
I think this is again an important point based on what we have basically seen on the debt restructuring. Obviously, when you look back, when we announced the debt standstill in 2022 April with ST and myself recommending to government, then government accepted, then expectation was that we would be able to complete this earlier than expected. I mean, this is, it took longer time. So the lessons we learned, obviously, because of the complication, we had the session discuss about the complexity of the debt restructuring, given the nature of the creditors that we have. So the thing is that I don't think we can ever afford to do it again, given the complexity and also given the situation we are in. I don't think second time, this is something the last thing, like the last IMF program, this should be the last restructuring of debt in Sri Lanka. We never think about, at least, because IMF is a different thing, but as a bailout, but debt restructuring is the last thing that we don't want to go back. And that's where what is more important is that I think there's a design of the restructuring analysis is the right balance of macro outlook of the IMF. The Peter and his team did an excellent job, where there's parameters set, and in my view, those are not difficult trajectory for country to achieve. In fact, the overperform for the next several years. That has to be the objective for us to prevent any kind of. And if you look at the key parameters, 3% growth for steady states, is in my view, if we do right structural reforms, we have a capacity and potential to go much higher, which means we reach the sustainability or improve the sustainability of debt much faster than what is in the framework. For that, I think obviously we need to ensure the lessons we learned, the mistakes we did in the past, we will not do going forward. I think one important message here, I want to, one important point, I think this is not much discussed. We think growth is one factor that will restore the sustainability. Obviously, that's true. But if we push growth beyond the capacity that we have without having right structural reforms in the other areas, for example, the labor and capital, for example, labor market reforms. We are aging population, and we have a labor force, female labor force is much lower. And we don't have a growing labor force. And there are skill mismatches, like Dusty mentioned. Without labor market reforms, if we push growth and investment without doing those things, we will see higher wages, and this will overheating situation. Even same thing on the capital market reforms and basically the land, for example. If you push investment beyond what is available as in terms of land availability without being increasing, it will only result in higher land prices that will not be good for the economy. So basic point here is that we need to push growth, but within the capacity, ensuring we are not going to overheating the situation and going back to boom bust cycles we had in the past 16 times. That's why we had to be very careful, because growth is a very popular thing. That all the things we're talking about, growth is important, but it's important we push for growth, not beyond the capacity that will lead to other imbalances creating somewhere else in terms of The current account imbalances, the fiscal imbalances, and exchange rate large depreciation, that will go back to a same old boom bust cycle. And this is why very important, growth should come, targeting growth should come hand in hand with implementing key structural reforms that will enhance the capacity to grow. Without that, I think that's a big lesson. We did not learn last 16 times. And even with debt crisis, leading to debt crisis, we still did not learn. That is an important thing that going forward we need to ensure. We need to push growth, but on a sustainable basis, medium long term with right reforms. And obviously, in my view, we can grow around 5% if we go in that, but we can't achieve that in a shorter period. A short period trying to push that growth, and always, Indrajit said, the sugar high situation is bad for any economy. That's the important message I want to make here.
Geeta, a question for you. You've seen many countries restructure their debt, major debt restructuring. How did they succeed? How did they keep the growth momentum going after the restructuring? Any examples you can give?
So yes, so there are examples of countries that went through difficult debt restructuring and then ensured that they never went back into it. There are examples of Jamaica, Cyprus, Uruguay, Seychelles, Grenada. There are several countries. So let me give you a few guiding factors that help. So in the case of Jamaica, for example, very high debt, went through IMF program, very serious debt restructuring that they went through. But despite that, debt levels were still pretty high, 150% of GDP. And what is the first thing? It's quite simple. You need fiscal discipline for many years. You need fiscal consolidation for multiple years. So in the case of Jamaica, for example, ran 7% primary surpluses for 6 years. That brought down its debt to GDP from 150% to 100%. And what's important, because it took so many years, it took, this was high level of fiscal consolidation, was maintained over 6 years. It meant that different political parties supported the consolidation. So even when new governments came, they maintained that momentum. And that is critical. And that's going to be critical for Sri Lanka too, which is, it's not going to be just 1 or 2 years of doing careful fiscal policy, but it's going to be multiple years before one truly moves away from the risks that come with high debt. So I think that is one very important factor. And once you do that, then that gives confidence for investment in the country and for growth to return. In addition, what was important is when you're going to do so many years of fiscal consolidation, you need to make sure that you have social stability and the society is with you. And that was another thing that Jamaica did, which was quite special in the way they managed their reform program. So they actually set up a committee made up of not just policymakers, but also civil society, including academics, civil society organizations, unions, many private sector. They formed a committee, and it was called the Economic Program Implementation Committee, that took ownership of this fiscal consolidation that was needed and met on a regular basis to see whether progress was being made and whether the right policies were being implemented and there was compliance with the program. So very strong ownership by multiple stakeholders in society was also very critical to maintaining this high level of momentum. And now, of course, they're in a much better place, low levels of debt, much more manageable levels of debt to GDP, and you have growth and so on. And you had also growth recover very quickly in Cyprus and Seychelles and others. But I think these are things to keep in mind, which is that it takes multiple years to also signal that this is a true break from the past. Otherwise, people are quite disbelieving that that may be the case, and including foreign investors would be disbelieving.
We're up to it. Many years of primary surplus to signal a break from the past.
Yes. In fact, we need to have a shift towards a stable growth.
Yes.
Based on the experiences that we got and the lessons that we learned. Among them, the few points are there. I would like to highlight number one, the debt sustainability will be a key. It's highly subjective, depending on the country's nature, ability, the level of income. So many things are required to be taken into account. When the level, even within our framework, what I feel is this 95% is also relatively high for Sri Lanka. If we can bring it down, so that would be ideal. As of now, we are working with, given the framework, legal and institutional setups have been already introduced. So whereas the Public Debt Management Act, the Public Financial Management Act, really provided the adequate room for us to manage this thing. As of now, annual the borrowing plan has been prepared, and the medium-term debt strategy has been prepared, where we would really focus more on local debts. Up to now, the situation is being managed very well, and we have an adequate local buffer as well. That also indirectly help us to bring the interest rate down, and that is one area. However, it is within this debt, within debt servicing, interest component is relatively higher, absolute amount of interest. So that is where even we target for 2.3% primary balance. So that doesn't give us a big space for us to deal with other things, because our interest the component is very high. So you highlighted that Jamaica, 7%. So must have just given a big space for them. So this is area we need to think of interest. The other area is, quickly, the tax system. We have to have a very the robust tax system, very simple tax system. As of now, lots of issues are there. Tax evasion and tax avoidance is pretty much imminent there. That is the reason why we have low the tax revenue as a percentage of GDP, whereas lots of tax rates are there for both individuals and companies. We have to broaden our tax base and bring it down, the rate should be bring it down, and therefore tax revenue also can be increased to great extent. And the other area is the prioritizing our the spending, so more focusing on infrastructure and the capital expenditure to attract and encourage the investment in other area, focusing more on SMEs. And the other the area we have focused is the development of human resources. That's going to play a key role in Sri Lanka, especially in health and education. We strongly believe that we can develop, and that will have multiple impact on our development. And the governance reforms as well, to a great extent. Now we are expediting it. Some of the things have been already achieved. So, and we are highly committed to implement these the governance reforms in the future. And above all, what really matters for us, how best the interest of different stakeholders, groups, even including our development partners and agencies, to converge towards one common goal, the prosperity. So that is the challenge. We are committed to face this particular challenge and convert this interest, because we have such a great political will to do. So therefore, we take the collaboration and partnering as key vehicles to achieve this the target. So this is how we have thought of shifting this towards the prosperity. Thank you.
Thank you. We covered a lot of topics, and that was the whole intention. So I was told to give 15 minutes for Q&As from the audience. We have 11 minutes. So Joanna first, and I don't see, if you could just introduce yourself once. Joanna, why don't you go first?
interesting discussion. So this question maybe is to Geeta or to other people who want to answer the question. When the DSA targets of Sri Lanka was set back in March 2023, the debt ratios, GFN, I remember a month later we had the WIO. There was a chapter 2 in WIO that talked about the natural interest rate. And the view was real rate had gone down, but there was an expectation based on that chapter in 2023 that real rates will eventually come down to pre-pandemic levels. There was this view that these long-term drivers of depressing R-star were still there. But of course, fast forward 2 years later, I think there's a lot of debate now that maybe R-star had gone up. And in the meanwhile, obviously we've had higher public debt, we've had rising term premium. I mean, clearly 10-year yields in the US is 200 basis points higher than where it was the last time, even more than 200 basis points higher than the last time Sri Lanka went to access the capital market. And yet a lot of these DSA targets that were set back in March 2023 kind of looked at pre-pandemic as kind of a reference rate and then kind of thought that things would kind of go back. So you've got both the R-star, you've got questions about term premium, obviously worries about financial fragmentation. I mean, people are now worrying about maybe the lack of safe asset and what that means for risk. So now the question is really, how should we think about, part of the projection for Sri Lanka is eventually to have access to the market by 2027. Maybe that's part of the graduation. Do you think that the DSA targets are still fit for purpose, given the changing environment? And what's plan B? Like if 2 years from now, it becomes very challenging, very costly. What's the plan B? And then should we rethink DSA frameworks in this environment of more financial fragmentation? I wonder if low income, middle income is the right framework, market access is the right framework. Should we think about market access between net borrowers, external borrowers, and net creditors? Like why should Sri Lanka have the same DSA framework as Japan?
Geeta?
Yes. There were lots of questions in that question of yours. And I mean, some of those are actually much broader than just about the DSA framework, which is, I think, a very important point that you raise, which is what is the interest rate world we are in right now? We had a period between 2010 and pre-pandemic, a couple of years after the pandemic too, when interest rates hit rock bottom and we all sat around talking about the interest rates are low for long and, central banks have already cut interest rates to 0 and they're going to keep it that way. And now nobody's talking about that. So we've now moved to a world where interest rates have gone up significantly. If you look at long-term rates, 10-year rates in the US, we're talking about 4.5% rates as opposed to pre-pandemic when it was 2.5%. So it was much lower. I think, setting aside what's happened with the R-star, the natural rate, and so on, and I can have a whole other discussion about it. I think for a horizon, which is reasonable for all of us to think about, which is the next few years, we are in a world where interest rates are going to be higher than what we used to think of as when interest rates had hit rock bottom. Because for multiple reasons, including that government debt issuances around the world are very high, and importantly, because central banks are no longer in the market buying that debt. So you've just basically had a decompression of the term premia that had completely collapsed during post-GFC. And so we are in a world where interest rates are higher, which obviously then has implications for everywhere else because US rates tend to be the floor above which all other country interest rates are. So that is one important area important thing for everybody to think about. I think every country, including Sri Lanka, should keep in mind that you are in a world where interest rates are high, borrowing costs are high. It doesn't look like it's going to go down very quickly anytime soon. And so your fiscal projections, your plan to reaccess markets, all of that has to keep that in mind looking ahead, and which is why building buffers, not having to rely so much on borrowing and high interest rate payments is an important piece of what you need to deal with. The second thing I want to mention, which is something that's unfolding in 2025, is because of fragmentation, what may happen to interest rates around the world, right? If it is indeed the case that the US has to rely more on its own domestic savings for its investment, then that's a world where interest rates are higher in the US, go up even more. On the other hand, if if China keeps more of its savings at home, that's a world where its interest rates are very low, go down even more. So we could see much more fragmentation in the cost of borrowing. But I think broad strokes, and the debt sustainability analysis, by the way, it's a framework but has very country-specific calibration. So it's not like Japan and Sri Lanka get the same calibration. It's very different. But the point you made, which is very important, is in terms of the global backdrop, is recognizing that we are in a world where interest rates are much higher than the world was used to. We've kind of gone back to basically pre-GFC at this point.
I guess it also goes back to the point you're making that think about more fiscal for a longer period of time, right? So, yeah, the question at the back. I'm sorry, I can't see you from here. Could you please introduce yourself? Two questions there. Let me go to the person at the back and I'll come to you, sir.
Thank you. Anushka Vijay Singha, Director of Center for a Smart Future and appointed member of the Governing Board of the Central Bank. My question is to Geeta. Geeta, one of the objectives of this conference was to draw out lessons from the Sri Lanka example for other countries potentially, maybe even the IMF's own practice. So I have two questions linked to that. One is just like what you told us now about Jamaica. If you had to pick out one feature or experience from the Sri Lanka experience so far to tell your other colleagues, to tell other countries in similar forums, what would that be? Or is it still too early, jury is still out? Second question links to some of the conversations in the earlier session around what Sri Lanka's case means for the larger story around debt restructuring, the fact that we have this missing middle-income countries are not part of the common framework. We see even in the draft statements around the Financing for Development Conference, a lot more focus around bringing private creditors to the table. We have the IMF's Global Sovereign Debt Roundtable. So my second question then is, do you think that the Sri Lanka case in any way inspires or informs more action around a middle-income framework that is slightly smoother, is a little more organized, and it doesn't leave two countries like Sri Lanka having to cobble together all of the coalitions that it successfully managed to do and get it done? Do you think that there is some link between our experience and what could happen for the larger re-architecture of debt restructuring? Thank you.
Should we take the second question also? Sir, your question.
Sorry, I'm Arjuna Parakrama, and listening to the eminent panel, I now understand what it means to say everything, not only is everything about economics, but economics is about everything. So my question is there no space for the ethical, for the principles of natural justice, for the widening gap that we are seeing between the rich and the poor, the Gini coefficient, for stunting and wasting figures that in your challenges, none of that was mentioned. There was silence about that. And also, in relation to that, do we only see the public as minions, as people to be convinced, where even the uprising is called populism, or corruption is wrong because it impedes development? Is there not an area where we can say something is wrong and that therefore we will not practice it for other reasons? So the ethical, and also tied to the ethical, is the role and the function of the people in this, not as passive acceptors who toe the line, but as those who would actually teach us a lesson or two. Thank you.
Okay. Geeta, you want to get the first question, and the second question the governor will take. You'll take the... Okay. Yeah. Sorry, I didn't hear you. Use the mic, please.
Yeah. I'll answer the first question, please.
Yeah.
The question about what was the lesson for the world from Sri Lanka, again, I think, and I said this earlier in my opening remarks, is that Sri Lanka's experience with debt restructuring threw up a lot of issues that exists in the debt architecture that needed to be addressed. And I think, a lot was learned from it, which can help future countries that are that enter into debt distress in dealing with it. So what specifically? I mean, basically, we moved into a world where, as opposed to when the previous official creditors were mainly the Paris Club creditors, and you had a nice Paris Club mechanism for moving very quickly in terms of providing debt relief and so on, to a official credit landscape that includes, in addition to the Paris Club, it includes China, which is a very big player, but then also India and then Saudi Arabia. So several other countries have come into this, and the question was, how do you get debt restructuring done in this much more complex landscape? So the common framework the G20 came up with was, okay, let's try to have a framework to help low-income countries do debt restructuring with this much more complex official credit landscape, and also have a level playing field with the private sector. But that did not include the middle-income countries. That did not include Sri Lanka. So Sri Lanka was not part of the common framework. The way I think about it, and William is somebody who would know a lot more than I do, but the way I think about it is that, well, yes, the common framework doesn't include middle-income countries, and ideally we would have a framework that is for all countries and not just for low-income countries. Practically speaking, a lot can get done as long as we all quickly understand what the rules of the game are. And so, even if we don't have a middle-income framework or a common framework that extends to middle-income countries, I actually think for practical purposes, we've gotten to a point, also thanks to the experience of Sri Lanka, where we understand better about how to share information more quickly, how to have comparability of treatment done across countries, and we should keep building on that. And especially in this current environment where there is very little appetite for multilateral resolution frameworks, we shouldn't waste our time on trying to build that necessarily, because we can make a lot of progress with just on a practical basis on what's been learned. I think Sri Lanka's experience is very beneficial. It's one of the things we have in our playbook that came out from the Global Sovereign Debt Roundtable. And we will learn from that, and we should keep moving. And I think this is something to be said not just about global debt restructuring, but I think every other area now, given the changed environment, the lack of enthusiasm for rules-based multilateral setups, I think we have to have pragmatic ways of dealing with many of these issues.
Minister, you'll take the second question.
I'll just take Parakrama's question about this ethics quickly. So very valid the question. Ethics. What is ethics? The right thing to do. So when we question about the ethics and the right things to do, again, that is referred to who you are. So when you take your own identity, for example, maybe a development agent, a government, a banker, financier, so you may do the right things within your frame. For example, especially in development, like doing the right thing, social justice, bankers and financiers, so right thing. So the conflicts of interest also arises. The maximization of your interest, profits, then you may tend to, by and large, ignore the rest. So therefore, it is the responsibility of the government to uphold this public interest. That is why I highlighted earlier, our political will is that. So while they are just doing the right thing within their peripheries, our responsibility is to converging this to uphold the public interest at all the time. However it is, we need to very patiently understand the situation. At the given moment, in an economy where the financiers or the money can earn from different modes, especially the money has different roles. Just invest in the real economy or invest in the financial markets and earn more. So that is where the importance of bringing the interest rates down, and by creating opportunity in the real economy, then only to some extent this balance can be achieved. So rather than letting financiers to they have multiple amount of money. And the other thing, the bringing the right things, the ethics or the social justice, without expanding an economy, without generating a value, so that is not going to be really the practical, because then you have to bring the social justice or the ethics with the given or the limited amount of value. Therefore, our first attempt is to bring more and more investments. So by facilitating investors, creating a level playing field, and to generate more value. So in the long run, by converging the interest of all the stakeholders, of course, we can bring the social justice and bring the common prosperity. So this is what we have thought of addressing. Of course, Parakram, it is really a very critical issue, challenging issue. Thank you very much.
Thank you. We're run out of time. Any last word from 30 seconds? What would be your one wish for Sri Lanka? 30 seconds.
Okay, that we develop a export-driven growth process, that we remove the anti-export biases in our policy, and that also that we recognize that we no longer can drive growth through labor augmentation because of our demographics. So it's all about innovation and increasing productivity to investment. We have to put our structural reforms on steroids now.
Great. Structural reforms on steroids, yes. Key point. Dushni.
That we come out of this crisis with stronger and more accountable institutions. I think without that, we can have the best economic policies, but we are not going to get very far.
Thank you. Institutions, Governor.
I think based on past experience, what I can say, especially the administration, policy making will have to be much more broad-based consultative, because the mistake we had in the past, I can remember in 2020, when the experts say, SG and myself within the central bank and the Johanna from independent and also from trading agencies, and you were saying that is not sustainable restructure. And then government was trying to kill the messenger. So my advice is, please open the lines for independent consultation and listen to them at least before making policy decisions, and don't try to kill the messenger. If that was a mistake, then people kicked out of the government when you kill the messenger.
Great.
I think everything has been said, which is that to remain committed to reforms to institutions, to structural reforms, and to bring society along with you in this journey.
Thank you. Minister, 30 seconds.
Yeah, thank you very much. The request is to do the right thing in order to transform the society for everyone to a livable place by respecting the humanity. In pursuit of doing that, so we individuals have, at our own capacities and within our purviews, we can do our tasks. But at the same time, by extending our collaboration and cooperations, the lasting solutions can be achieved, only achieved through global the cooperations. At that, because now we are living in such a global world. So most of the issues such as climate change and all the other things are at that top level. So look forward to working with everyone, all these partners to achieve this noble goal. Thank you very much.
Thank you. A big hand for the panelists here, please. Thank you.